Happy Wednesday, the 21st of January. My name is Jessica Amir, market strategist here with Moomoo. It's great to have your company as always. Well, here we go again with Trump threatening new tariffs on Europe as he heads to the World Economic Forum. We've seen stocks plunge. The Nasdaq 100, the biggest loser overnight, down 2.1%, falling below a key level. It's 50-day simple moving average and what we call gapping lower. And this is basically an ominous sign. We're going to cover everything you need to know later, but just bear with me. I'll cover what you need to know first. We've also seen the 10-year bond yield peak at 4.3%. That's its highest it's been since September. Of course, we know tech stocks do not like bond yields rising. Remember that. Another thing, the market sphere gauge, the VIX, you can track that on Moomoo. The VIX is at 20. That's its highest level since November 25. The US dollar is also down, and that's why we've seen safe havens rally up. Gold and silver, lovely stuff. They're both hitting brand new record all-time high after record all-time high each and every day. We cover gold. We covered gold in yesterday's video. We'll link that in the description below for why you should be considering adding gold stocks to your portfolio. Gold is up about 2% just in one session alone overnight. It hit a record historical all-time high. Hallelujah, $4,760 an ounce. There's calls out there, guys and girls, for gold to break above 5,000. If it does, some are saying gold will head to 5,200 US. But if that happens, it remains to be seen. Silver also on a tear. Silver's hit another brand new record all-time high overnight, $94.53 US. And again, just as a reminder, there's calls for silver to punch higher. The next level to watch out for is $100 US. Silver also copping a lot of buying, not just because of safe haven demand, but it's also been dubbed as a key pin-up metal in AI, solar, and the electrification. Let's touch on other metals that are moving and punching higher. Copper, aluminium, nickel, they're all charging, but platinum, you could argue, that was a showstopper. It closed at its highest level in history overnight. So keep your eye on all these key commodity stocks today. So this basically sets the scene. What the heck is going on? Well, some investment managers right now, like Evercore in the US, are basically saying tactically sell America. Again, why is that? Here's what you need to know. Well, it's not just investment managers, but many global investors are seriously concerned that markets could, I don't want to say the word crash, but I am going to say it. Markets are concerned that we could maybe see a crash or a serious pullback in the short term here. Now, I'm going to cover why that is the case, but just bear with me. But as history has shown us, each and every time the market has crashed or corrected, or indeed seen a bear market, it's brought about buying opportunities, and we've seen the Nasdaq 100 and the S&P 500 pull back and then recover. It's what we've seen before, and it looks like we might see this play out again. So why is this? Well, there's three major concerns right now. One of those, first and foremost, there's concerns that European companies will not see any company earnings growth this year. That's because Trump is pounding on the table. He's basically saying there are going to be new tariffs for Europe overnight. He doubled down on this. We spoke about this yesterday. There's a link in that to yesterday's video in the description below. The second reason markets are concerned right now is geopolitical tension. Hello, it's on the rise. Trump again doubled down on gaining control over Greenland. So markets are concerned about this. That's why, hello, gold and silver are roaring up. Now, the third major concern is a little complex, but bear with me. So right now, there's concern about debt-ridden bond markets being worried about interest rates in Japan hitting record highs. It's a little complex, so just bear with me. So remember that much of the world, think about a lot of the tech companies in the US, they actually borrow money from Japan. Why on earth would they borrow from Japan? Well, remember, Japan, not long ago, their interest rates were almost 0%. Now, this is why Japan's debt market is so phenomenally huge. It's around 7.8 trillion US dollars. That's freaking eye-watering. But right now, the concern is this. Japan's bonds are surging, and it's causing global tech companies' borrowing costs to explode. Obviously, that was evidenced by Japan's 40-year bond yield hitting 4%. That's its highest it's been in history. This is a concern. This is going to probably hurt US tech companies, and it's probably going to hurt markets as well. And this is why I'm saying we might need to see a serious adjustment here. Simply, The worry is right now, to put this into context, how has this played out before in terms of other Japanese carry trade concerns in markets? Well, remember in July in 2024, I basically came out here on Moomoo saying we could see a market crash, and that's kind of what it played out. We didn't see a crash, but we did see a serious pullback of sorts when Japan carry trades first came about, those concerns. We saw the NASDAQ 100 fall 16% in 17 days. Again, saying that again, 16% in 17 days. But we saw fortune, as always, favor the brave. And that's because investors who bought into the dip, they patiently were rewarded because the market gained almost 30% over the next 13 weeks. But the emphasis is on patience, right? So this is a major consideration right now. Remember, again, fortune favors the brave. Shelby Davis said that. Shelby Davis, who on earth is that? Well, a sidekick of Warren Buffett, but he didn't get much kudos because he gave away most of his money to charity. Anyway, let's look at the QQQ. So the QQQ tracks the NASDAQ 100. It's, I guess, one of the biggest tech ETFs that you can buy on global exchanges. And it's how I want to basically demonstrate how you could play out this scenario. So let's say if you bought $100,000 of this ETF, the QQQ, that tracks the NASDAQ 100, if you bought $100,000 of the QQQ after the Japan carry trade crash of 2024, when we saw the market fall 16%. If you bought then, your 100K would have turned into 127,000 over 13 weeks. Again, patience and bravery, right? But if you didn't time the market bottom correctly and you bought after the market crashed 10%, and then you saw the market fall another 6%, you might be kicking yourself. But hey, your patient friends and family who played the long patient game and held on for 3 months, they would have been still rewarded because they would have turned $100,000 into $121,000. So you would have made a 21% return. The point is, it's hard to pick the bottom, but remember, we have seen a QQQ and the SPY recover throughout history from market crashes. So a few points to also point out. The QQQ, again, that tracks the NASDAQ 100, it lost 2.1% overnight, but it's still up about 16% over the past 12 months. But I do suspect that you'll be seeing investors take profits out of this and also buying the inverse, maybe QQQ, that bets on the market falling, right? Also, I think that this is a really good ETF to also look at because they give you exposure to the highest growth top 100 tech companies in the US. So obviously this ETF includes companies like NVIDIA, Apple, Microsoft, Google, Meta, Tesla, the list goes on. And half of the holdings are the Magnificent Seven and also include Costco as well. So you're getting diversification, not just tech companies as well. But this ETF should be on your radar if markets do fall again. Again, I'm not saying markets will. No one can say that with certainty. I'm just laying out the serious probabilities. Of course, history never repeats itself, but it does tend to rhyme. Pullbacks typically viewed as buying opportunities. Let's change pace to silver now. Silver, one ETF to watch is the Global X Physical Silver Structured ETF. Long ticker code here, ETPMAG. It basically tracks the silver spot price. It's listed down under here on the ASX, and it's basically giving you exposure to physical silver. And physical silver is held in vaults in London. So that's something for you to consider. Also, of course, this ETF tracks the silver price, and we've seen the ETF gain 30% this year. 30% this year, that's amazing. It's only the 21st of January. And this ETF is also up 88% since November 1. So as already mentioned, we are probably going to see further momentum and further push up in precious metals because money is rotating out of risky assets and it's going into defensive, safe havens such as gold and such as silver, a la the ETF, ETPMAG. It's up 183% in the past 12 months. As for what's ahead, so we spoke about silver potentially punching to $100 US. There's lots of calls out there for silver to break from 94 to 100. But then the next level to watch, if we do see that play out, the next level to watch might be seriously to consider silver getting from 150 to 200 US. That's what the broad consensus is out there. So just watch and wait and see if that plays out. But if you do believe that's the case and you are also bullish on silver, you might like to look at this ETF, the Global X Physical Silver ETF. It's basically, again, just as a reminder to reiterate, it's an easy way for investors to buy into silver if they believe the silver price will continue to push up. For more silver ETFs, check out Moomoo's platform. Last but definitely not least, we've been speaking a lot about defense being a key focus of 2026. Of course, defense is a key focus of Trump 2.0's administration because he wants to take over Greenland, and there's lots of countries that are really aiming to increase their defense spending. And Aussie's defense darling is DroneShield. We have spoken about this many times before. It's a leader in drone detection, drone jamming guns. We previously interviewed the CEO and had him here on Moomoo's network. Now, DroneShield gained 4.2% yesterday on the ASX. And it's basically done a phenomenal, massive turnaround. It's up 177% over the past 2 months. And it's also been a huge driving force of Australia's defence and aerospace sector on the ASX. That sector has gained 30% this year. Again, phenomenal stuff. We're only 21 days into the new year. Now, DroneShield, they've seen a wild ride. Yet again, they have a history of doing this, it seems. So DroneShield at one point was up 770% last year, and then it hit $6.70 in October, and then it lost most of those gains in 1 month. Why? Well, we saw some directors basically take action, and it spooked the market, and lots of confidence was taken out of the stock. But since its November low, DroneShield has surged back towards its highs. The stock is now at $4.74, and the average analyst price target, they range actually between $4.30 and $5.30. And on the Moomoo platform, we can see that DroneShield has got a buy rating among analysts who cover the stock. Plenty to watch and consider.